I started actually at probably at the combination of INTL FC Stone. We were INTL side was a broker dealer down in Florida here. FC Stone was the combination of Farmers Commodity Corp and Stone. I think during the financial crisis of 2008 was that we felt both companies felt you had to have a good capital size to be pertinent to the community and the ecosystem. So combined at that time, I think with the merger in 2009, the company was probably worth $230, $240 million. And you felt like you needed to be a particular size to be credible to counterparties. So we sort of put the two entities together. And we sort of have one side, which is more of a commodity brokerage firm, and the other side is probably merchant banking. But the two sides together made it a very complementary business, right? One of the things that the core foundation is that we have real, true customers that we want to support, and everything we do is based on what customer expectation and demands and what we can provide to them. Since then, what we've done is we actually added services and capabilities, right? We have the commodity side, we have the security merchant banking side, physical business, but combined we bought into fixed income, we bought into the energy business, bought into the coffee soft business, right? And we added a bunch of capabilities so that we can provide service all the customer, commercial, institutional side that can help them to expand. We believe that, right? As our customer thrive, we will thrive, and that we've done that tremendously. 2008, 2009. In the brokerage world, as you know, the futures markets, interest was a big driver prior to that. We now can actually look at our business, and we're probably one of the high-touch, high-service brokerage firm out there. But we have to be paid properly for that, and people have to value that, right? And we do a lot of consultative recommendations and everything else, but we are to make sure that you can survive and you can get the right return for the services you provide without interest. Right? And we've done that as a public company. Our stated goal as an executive team is that we want to get 15% return on equity after tax. And our goal is that you have to price your service properly. And that means sometimes if the business or the customers don't believe that you're getting the right value, then those are customers that probably aren't going to actually take the service you provide. And we have to move on to customers that focus on customers that value that, right? And make a business model that can actually stand alone without interest. Now with the current market environment, interest now solves a lot of problems, but we still focus on the core business without interest, right? Interest should be the extra gravy. That being said, it just gets to a certain level, you still have to share the interest with the customer and everything else. There's only so much spread that you're going to be able to take. But so that we look at it, that's gravy for us as a firm, right? That's our capital and our equity getting benefit from that environment. But that should not be the core of what you do on a day-to-day basis, especially from a custodian and a brokerage firm perspective. You look at the different businesses we have and the volatility of our income stream and everything else, that the retail segment actually helped level off our income, and it gave us diversification. This retail is something we've never had, and like anything else, the retail base sometimes is inversely proportionate to the commercial and the institutional business. So that helps diversify our revenue stream. That being said, I do believe that the retail segment is evolving, right? 30 years ago when we got in the futures business, you'll see that the protections on the retail customer, ensuring their suitability, that it wasn't the grandmother who, putting her retirement life savings to risk in the futures market. I think education and have evolved, and that there's now a lot more knowledge. We do a lot of hedge schools and education to help our customer understand the risk management and the hedging strategy that can be available. And so we want to expand our customer base, right? So FX, the gain capital future markets got into the FX world, but we want to be able to provide a broad-based asset class that they can trade FX, they can trade equity, they can trade futures, they can trade fixed income. We want to provide every opportunity in there. We believe there are a lot of retail firm out there, but they're very single asset class. We believe that we can offer a multi-asset class platform for retail individual that has an understanding of the whole capital market structure. One of the things that we want to do is get to be more technology advanced. All right, we changed our name from INTL FC Stone, which is a long, cumbersome name, to StoneX, right? And we're just following the trends. We want to digitize and change our offering. From a commercial perspective, we have clients that have been with us 30 years, but they're evolving too. When their general manager retired, the next general manager is 30 years old. He's not going to want to interact with StoneX the same way that the previous general manager did. So we're trying to provide technology solution, automation, self-service, a lot of the new advancement that we haven't, we invested a lot of income and time and resource to that. We believe those advances will help us in that next generation that comes through. Gain's going to help us take to the next level to market to the retail client. From a marketing perspective, from a digital search perspective and everything else, that we don't have the experience there. And that Gain and what they've done with the retail segment and all the technology background, the marketing and everything else that goes with it, that will help us evolve and get us to more of a mainstream, into the general household than versus our commercial and institutional client base.